Breakout Investing with your host, Ken Shreve.
Okay, good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. I am your host, Ken Shreve. Always appreciate you listening in. My show airs every Tuesday and Thursday at TFNN from 3 to 4 p.m. Eastern Time. And if you want to call into the show, feel free to do so. The number is 877-927-6648. If you can't listen to the show live, it's available as a podcast anytime on iTunes. And, of course, typical reminder, another way to listen to all TFNN programming is with your smartphone. Just type in tfnn.mobi on your smartphone browser, and you can get the stream 24/7 that way as well. Folks, a couple of promotions at TFNN.com right now. A new Tiger Dollar promotion. Sign up by December 18th and get a 30% bonus match on any amount over $250. So you purchase at least $250 worth of Tiger Dollars that you can use to purchase any premium products at TFNN, and TFNN will give you a 30% bonus match. TFNN will also make a donation of up to 10% to the Salvation Army in your name. Have a webcast coming up next week, December 14th at 6:30 p.m. Eastern. How to maximize profits in the early stages of a new market uptrend. I was, hoping we were going to start to see some buyers come back into this market, perhaps due to good headlines out of Europe. Unfortunately, the headlines continue to be quite poor out of Europe. But the webcast on Wednesday will still be filled with a lot of great information about how I approach this market, what have I been doing in terms of buying growth stocks, so you'll get a good idea of my investing strategy and how I run things for my Ultimate Growth Stocks newsletter and model portfolio. I do have a significant cash position at this time. The market trend is down until proven otherwise, and I think it makes sense to not be aggressive here, not try to force the issue, stay out of the market's way. At some point, it may take a while, but at some point we're going to see new money start to come in from the sidelines, but I think it's unrealistic to expect that's going to happen with everything that's going on in Europe. All right. Let's take a look and see what the market's doing today. Unfortunately, it's not good. It's getting worse, as a matter of fact. The Dow right now at its session low, down 177 points, 1.5% to 12,018. The NASDAQ bleeding pretty badly here, now down 44 points, 1.7% to 2604, and the S&P 500 down close to 24 points, 1.9% to 1237. Taking a look at, let's start by taking a look at Apple, because there was some good news today. Shares of Apple, got more upgrades. Stock right now selling at 14 times trailing earnings, 10 times forward earnings. Apparently, the projections for iPhone 4 sales continue to look very strong for the fourth quarter. So let's start with some good news here. I'm on record saying I'm still not a big fan of Apple stock here. It's trying to get over its 50-day moving average. The stock was recently trading up $3.55. Actually, let me go ahead and get an update here for Apple. And we'll see it's up $3.21, 0.8% to $392.30 a share. Trying to get back above its 50-day moving average. It's not clear to me that it's going to be able to do that. It is trading near its session low today, but again, the NASDAQ is bleeding pretty badly here, so not surprised to see a little bit of selling pressure in Apple despite some analyst upgrades today. So iPhone 4S sales look pretty good for the fourth quarter. Estimates anywhere from 28 to 30 million iPhone 4S units. Pretty incredible. All right, let's take a look at the indexes here. We'll take a look at the Dow first. Just mentioned that the Dow is down about 1.5% today. It is still holding above its 50-day moving average. You can see that, but volume today is a little bit higher than Wednesday's session. Volume was pretty light in the market yesterday on the NYSE during Wednesday's session. Volume was about 960 million shares. Looks like it could come in about average today, maybe a billion or so, around that level. It was tracking about 5% higher than Wednesday. And then NASDAQ volume yesterday, just over 1.6 billion shares, below average, but NASDAQ volume today tracking about 10% higher than Wednesday's level. So pretty good distribution in the market today. And we mentioned the 200-day moving averages. Let's move over and take a look at the S&P 500. This is very well documented in recent days, among market technicians. This 200-day line for the S&P 500 right at 1263 is really just a ceiling at this point. And you see the S&P 500 now trading near its session low, down 1.8% to 1236. So, market's not looking too hot here. Market's not looking too hot here at all. And a big part of my investment methodology for Ultimate Growth Stocks is to, basically buy stocks during market uptrends, swim with the market tide as much as possible, and start raising cash during market downtrends. Because, looking at the action in the market today, hey, believe me, I would not be surprised at all to see this market up 2% tomorrow. I don't think it's likely, but listen, nothing would surprise me in this market. So, but even if we do see, a big percentage gain tomorrow, it's not going to change the fact that there's not a lot of leadership out there in the market. Yeah, the home builders have come back to life. Yes, the financials have come back to life a little bit. The enterprise software makers have done well recently. News day before yesterday that SAP is buying SuccessFactors, so you got a lot of enterprise software makers actually hanging in there pretty well today, holding on to big gains from yesterday. But even if we do see a good day for the market, which I don't think is likely, but if it happens, I'm not so sure it's going to change my overall perception on this market. We are 9 days into a rally attempt for the major averages. No follow-through. Is it likely that news out of Europe is going to all of a sudden bring a whole bunch of new money in from the sidelines? I just don't think it is. But we'll see. If we're up higher tomorrow, we get a big rush in trading volume. We'll just have to take it day by day. But the market's action today, and looking at the NASDAQ composite here, I mentioned that was down 1.6%. You can see its 200-day moving average, quite a ceiling. There's just some damage out there now, and just a tough market. So we'll keep our fingers crossed. Maybe we get some good news tomorrow. But judging by what ECB President Mario Draghi said earlier today, remember the futures were, kind of unchanged, really weren't doing much of anything earlier today, and then news that the ECB cut its lending rate by 25 basis points to 1%. Futures pop higher, and then Draghi comes out and says that don't keep your hopes up for more aggressive easing measures like bond buying, which is what the market wants. And I was on Tom's show yesterday. We're talking about the fact that this euro is weak and the dollar is strong. I mean, that's a significant headwind for this market. Let's go ahead and take a look at the Currency Shares Euro Trust, an ETF that basically tracks the price of the euro. You can see it's under pressure today, down 57 cents to 132.96. It is trading near its session high, but I mean, this is a broken chart here. Then we can look at the UUP, which is a bullish dollar index fund, UUP. You can see that is up 0.5% today to 22.17, and you have a technically strong chart here and an FXE that is technically weak. So this is going to have to flip-flop at some point. We're going to need to see serious selling come into the dollar, serious buying in the euro. And when that happens, if that happens, when that happens, you should see a lift to the U.S. Stock market. But all very questionable right now, and not a great day for the market today. Bottom line, it's just not an easy environment to make new buys with conviction. I nibbled at a few stocks recently for my model portfolio, knowing full well that there was a chance they may not work. And if a trade doesn't go my way, I'm a big believer in using stop losses, so keeping losses on a very, very tight leash, because they can always be overcome. I never want to be in a situation where I'm watching a small loss get bigger and bigger and bigger. This is a terrible situation to be in as an individual investor. You let a 3% loss go 10%, 20%, 30%, and then you're talking about a pretty serious loss that's going to take weeks, months, if not years to get back. So pretty good idea to kind of stay on the sidelines here. Wait for new institutional money to come in from the sidelines. It's you're looking at fundamentally strong stocks with bullish charts. They're just not going anywhere. There's just too many sellers around this market to think that fundamentally and technically strong stocks are going to make meaningful headway. So, like I said, rally attempt started on November 28th. Today is the 9th day of a rally attempt for the major averages, and still haven't seen follow-through, still haven't seen confirmation of a new uptrend, and with what looks to be a distribution day taking shape, at least on the NASDAQ market, underlying market health is all of a sudden very much in question. Strength in the home builders, yes. Financials under a lot of pressure today. A lot of Dow stocks acting well, which I think is noteworthy. It's almost like a flight to safety trade here. Let's take a look at shares of McDonald's. That's a Dow component. Stock is outperforming nicely today, up 98 cents, 1% to 97.43. This is an extended stock, okay? And this is one of the things I'm going to be talking about on my webcast next week, December 14th. That is a Wednesday, 6:30 p.m. Eastern. One thing I'll be talking about is, avoiding that pitfall of chasing stocks that are extended in price. McDonald's acting very well in this market, but the bottom line, it is extended, and you don't want to buy it up here. Fundamentally, very strong. Your last buying area, is probably in the back all the way back here when it broke out over $91 a share. You had another maybe little add-on point here at $95 a share, but it is extended now. News from McDonald's earlier today: global same-store sales jumped a larger than expected 7.4% in November. So there's no question that McDonald's is executing. Very well-run company, almost a case study into how to adapt to changing consumer needs. Just extraordinary execution at McDonald's in recent quarters, and not going to hear me saying anything bad about McDonald's, but it is extended up here. Have to give credit to other Dow stocks as well that are working here. Shares of IBM. Nice little base-on-base breakout recently, holding up relatively well today, only down about 0.9% to 192.38. So a lot of compelling action among Dow components. Aggressive growth, higher beta names still under pressure, still very vulnerable in this market. All right, folks, stick with us. We're going to take our first break. We're coming right back. Breakout Investing on TFNN.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. My name is Ken Shreve. Coming up in about, let's say 15 minutes or so, my colleague over at Real Money, Bob Lang from ExplosiveOptions.net, is going to join me, talking the market with Bob. We're going to get his take on market action today, what's going on at that EU summit, and also talk a little bit of Apple. So that'll be coming up at 40 minutes past the hour, thereabouts. So headed into break, talking about some strong performers in the Dow, McDonald's, IBM. Actually, a lot of stocks acting well in the Dow. Another stock that pays a pretty good dividend in the Dow, Kraft Foods, acting well here. Big gains in recent days, and only down a penny today to 36.33. So a lot of these Dow components that pay dividends. Kraft's dividend is 3.2%. Really no sellers at all in Kraft today. That stock is acting pretty well here. And let's not forget about Verizon. Also has a big dividend yield in the Dow of 5.3%. Shares of Verizon down 33 cents today to 37.98. It had been running higher for 7-8 days in a row, down for 2 straight days, but still holding on to the better part of its gains, not acting too badly here. Shares of Verizon down 33 cents to 37.98, and a nice dividend yield there as well. How about Domino's Pizza. Last check, the stock was outperforming today. Really does not want to go down, so buying demand strong in the stock today. Pretty good volume in Domino's. It's up 2.75%, 92 cents to 34.38. Can't argue with this company's track record of execution. Bottom line, though, is that this is another stock that is extended in price. So on a daily basis, you're always going to see stocks outperforming the market, but you really need to pay attention to where the stock is trading at, how far has it come over what period of time. And the thing about Domino's is you're buying it up here, you're buying it too late. Of course, it could get higher. It could go higher from here. But last time to buy it, here was the breakout all the way back in October. Okay, remember we had that nice rally in October, and the market started to act better, and you had a nice breakout in Domino's. Specifically, that day was October 18th, and it cleared a swing point here of 29.74. So that was your ideal entry point, 29.74. So at 34.38, the people that bought when it broke out over 29.74 are still in good shape, and there's certainly no reason to sell the stock. You don't have any sell signals, but bottom line with Domino's right now, if you're looking to enter the stock for the first time, I'd be careful up here because it is a bit extended. All right, economic data today. Again, this is what is frustrating, maddening about this market. Europe is the focal point, but we had more good economic today. Big drop in weekly jobless claims. They fell to their lowest level in 9 months. Claims dropped 23,000 last week to 381,000. Economists were expecting a much smaller drop to 395,000. So nice drop in weekly jobless claims. Pretty quiet in terms of earnings, but let's take a look at Costco. They reported before the open, another exceptionally well-run retailer. Shares of Costco down $1.18 today, 1.4% to 86.29. It has been a strong price performer in the market. Shares of Costco under a little bit of pressure today. Pretty decent bottom line and top line growth at Costco. No surprise there. Earnings up 13% from a year ago to 80 cents a share. Sales up 12% year over year to $21.6 billion. Concern here is some pressure on margins. Longs will say that's probably not a big deal, but Costco is actually not having a bad day. It hit an intraday low of 84, and now it is trading up near its high for the day. It's at like I said, 86.29. So it has recovered earlier losses and is trading up near its session high. Recent breakout for Google over a swing point of 86.34. That would be this area right here. And again, bottom line is that is Costco still within buying range here technically? Yeah, it is. But the bottom line is that you have a market that's in a downtrend, and that is problematic because most stocks are going to follow the market trend, and you have to pay attention to that. So Costco is a name that I'd like to own Costco at some point, but I don't want to own it until I see a signal from the market that the trend has turned meaningfully upward, and that's going to happen when new institutional money comes in from the sidelines. Clearly not happening at this point. All right, folks, you're listening to Breakout Investing on TFNN. We'll be right back.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing Breakout's gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks. Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Did you know that the price of gold is up over 24% this year, while the GDX, the Market Vectors Gold Miners ETF, is actually down 1.4% this year? Not all gold stocks are created equal, and not all gold stocks move with the price of gold. In October, Tom O'Brien recommended a buy of FCX in his gold report, and only 6 trading days later advised his clients to close the position, profiting almost 22% in this one trade. During the same 6 trading days, the price of gold was barely up 5%. Tom O'Brien's weekly newsletter, The Gold Report, gives investors the inside edge they need to profit in this gold market. Each Monday morning, Tom issues a gold market update at around 9:30 a.m., then issues a full report each Tuesday afternoon. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report. To order your gold report with a free 30-day trial subscription, log on to tfnn.com today or call 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Taking a look at oil here, down 2.1% today to $98.34 a barrel. We'll take a look at USO, an ETF that tracks the spot price of West Texas Intermediate. USO today down 1.9% to 38.06. Still hanging in there. Tremendous price performance from USO and still holding above support here. Also, gold. Got hit pretty good today. Settled at its lowest level in more than a week, actually. February gold dropped $31.40 or 1.8% to $17.1340 an ounce. Let's check on the Spider Gold Trust, the GLD. That right now is trading at 166.36, trying like heck to hold on to its 50-day moving average here, pretty much sitting right at the line. Right now, the Spider Gold Trust is down $3.04, 1.8% to 166.36. Let's take a look at Randgold Resources here, popular gold miner with operations in Africa. Shares of Randgold Resources down 96 cents today to 107.84. It too, is trying like heck to hold its 50-day moving average here. Stock has been under a lot of selling pressure, firmed up recently, but again, will it be able to hold support, or will it not be able to hold support? That is the question right now, as gold looks like it's on the ropes. Folks, don't forget TFNN and Great Panther Silver want to give you the gift of silver. So we're giving away one silver coin each business day during November and December. Just go to the homepage for more details. That's the Great Panther Silver giveaway. Let's take a look at Affimax, AFFY. I don't normally talk about stocks under 10 too much, but Affimax is having a really solid day today. Stock is up 38% to $8.09 a share. News for Affimax was that an FDA advisory panel recommended approval of the company's new drug. Boy, this is tough to pronounce. I was practicing it all morning. Peganestide for the treatment of anemia associated with kidney failure. If approved, the drug would compete with Amgen's Epogen and Johnson & Johnson's Procrit. So really strong day for Affimax, up 38% to $8.09. I mentioned some of these enterprise software makers really showing excellent price strength in this market. And, you know, price strength is important to pay attention to when the market is under distribution on a day like today. Now, I just checked the markets recently. It looked like they were trying to come off their lows, and they're rallying a little bit. NASDAQ is now down 28 points, 1% to 2621. Dow down 97 points. S&P 500 down about 15 points or so. So trying to rally late in the day here, but not by much. But you know, relative price strength is important. So a name like Ariba showing very good technical action here. The stock is up 24% today, 24 cents today, 0.7% to 33.73. The stock is bucking the trend. Enterprise software maker. Remember news day before yesterday. Or was it yesterday? It was either yesterday or the day before that SAP acquired Success Factors, $3 billion, just over $3 billion, I think it was. So a lot of these enterprise software makers doing very well. So you have Ariba. How about NetSuite, ticker N, on the New York Stock Exchange? NetSuite also acting very well, holding on to gains after a big move last week. And finally in the group, Taleo. Another stock that holding on to its gains nicely. So it does appear these enterprise software makers have pretty good support. Shares of Taleo down only 6 cents today to 39.28, holding on to gains nicely. Bob Lang joining me next, folks. Stick with us. We'll be right back.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before December 31st from your local Barnes & Noble store. And you will be given access to not just one, but two exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. Hi, folks. Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you, folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Let's check the markets again with about a little more than 15 minutes left to go in Thursday's session. The Dow down 143 points, NASDAQ down 37.5 points, S&P 500 down 20.5 points. I figured we'd get some market perspective from a good friend of mine, colleague over at realmoney.com. Bob Lang runs a website called explosiveoptions.net. I think I have a good feeling he's going to be a soothing voice in a difficult market like today. Bob, do you think you can be a soothing voice for me and our listeners today?
Well, I'll tell you what, Ken. This is a if you wanted volatility, you couldn't have asked for anything more than what we've had today. I think that what the European Central Bank did this morning was kind of expected. Some of the chatter that came out from Mario Draghi this morning was not what people wanted to hear. But of course, all he was really just doing was squelching out some of the rumors and innuendo that's been flirting around this market for the last week and a half. So, mind you, it's a 2% down day is not anything, special, anything that we would like to see, but especially in just one day. But I have a feeling that, what's coming out tomorrow and maybe the next couple of days is going to bring the markets back to the upside. What do you think?
That's interesting. That's interesting that I would hear you say that. I don't know, Bob. I just think it's it seems like the ECB is totally intent on not following the steps that the U.S. Fed followed back in 2008. They just don't want to do that. They don't, Draghi said today, don't expect a bazooka. So, I mean, are you confident that the headlines out of Europe are going to be enough to make this market happy and enough to really bring new money in from the sidelines? I mean, we could end up down 1.5% today, but I said earlier in the show that no one would be surprised to see a 2% up day for the market. Whether or not there's volume behind that move is anybody's guess. But, I mean, are you confident that we're going to hear anything out of the summit tomorrow that's going to make the market happy? I mean, what does the market want to hear?
Well, I think from a market perspective, my expectations are very low for them doing anything positive. So I think anything good that does come out of it is going to be met with some optimism with the markets. I think my sentiment is pretty much shared with most people out there. If you recall, for the last year and a half, since May of 2010, when we had the flash crash, which of course was a result of a lot of different things, but the market was coming down anyway because that was when the Greece troubles first started coming above water. I think at this point, my expectations for them doing something good are really rather low. So if they do something positive, with the Fed and the other governments, sovereign governments as a backstop, is what we found out last Wednesday, it could be good. Well, look, Ken, since last Wednesday, the S&P had been up over 110 handles. Prior to today, it was about 100 handles. So
over optimism about what they may hear from the ECB, what they might hear from Draghi, what they might hear from the EU summit. Now, if the optimism is not, if the market is not placated, that's potentially problematic, I think.
I totally agree with you, and that's why. We're seeing a big push into buying protection today. People are selling options. They're buying volatility. They're buying the VIX. They're buying the VXX today, and for good reason, because the uncertainty is still there. We didn't get much clarity today, obviously, and last week anything that people were positive about. When we gap up 35 handles on a Wednesday, second time in 3 days. People thought, we have this whole problem solved, and here we are a week later, and maybe that isn't really the case. So,
gotcha. So, Bob, we talked about Apple earlier in the show, and you had a pretty good, interesting trade on Apple. So I hear a little birdie told me. How'd that work out for you?
Yeah. We picked up some. I've been long some Apple January call spreads for about a month and a half now, and they haven't entirely been working great, but now they started working. I had some weekly calls that I picked up yesterday on Apple, the 390s. They got an upgrade today from UBS. I don't know if anybody paid attention to that, but apparently the analyst believes that iPhone sales are going to be better. He might have an upside for iPad, but he didn't mention anything about the iMacs. And from what I've read, from what I've seen, is that they've been flying out the door. So I think this is probably just the first move for Apple.
Well, if it's one thing that Apple does not suffer from is lack of analyst support. It seems like a week doesn't go by where some analyst isn't pounding the table talking about strong demand for the for the company's products. Bob, what else you looking at? Any individual names out there that look interesting in this all of a sudden weak tape? What's catching your eye?
Nothing. As far as anything positive is concerned, I was looking at perhaps possibly looking at some gold, because if the euros do come in with some kind of a solution tomorrow, it's probably going to be inflationary. I think the reason why gold is down today is because Draghi was pointing to less inflationary measures, which counter that is probably deflationary. But I think that maybe looking at some gold or some silver plays here might be a good way to go.
So when you have a U.S. dollar index chart that is really bullish right now, can't that get in the way of the performance of gold? Gold typically isn't going to need a weak dollar to work. What's your take on this strong dollar, weak euro? Seems to me that needs to flip flop for this market to go anywhere, and really for gold to start its outperformance again. What do you think about that?
Well, I think when you measure the U.S. versus the eurozone, I think there's stronger economy in the U.S. versus the euro. Dollar.
Gotcha. All right, Bob, you still with me?
I'm still with you, Ken.
All right. Well, hey, Bob, I got to go to break. Always appreciate you coming on the show, and we'll talk to you again soon. Okay?
Thanks a lot, Ken. Appreciate the time. Have a good one.
All right. Thanks, Bob. It's Bob Lang from ExplosiveOptions.net. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also, a regular guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, up next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Unfortunately, it looks like we're going to get closed near session lows today. The Dow now down, call it 201 points, 1.6%, 1.7% to 11,995. Down below 12,000. The NASDAQ down now 50 points, 1.9% to 2598, and the S&P 500 doing the worst, down 2.1% now to 1234. So ugly day for the market today. We'll see what tomorrow holds. A couple of interesting stocks out there that I'm watching. Again, I am interested in price strength in down markets, so let's take a look at Silicon Motion Technology. This is a chip maker whose technology is found in a lot of consumer electronics devices. Shares of SEMO doing well today, up 1.8% to $19.55. Excellent relative price strength in this company. It's hard to find a lot of good news in the chip sector right now. A lot of beaten down stocks. Mentioned that Intel is doing pretty well in the Dow, but Silicon Motion Technology, excellent company here. Very strong growth and holding firm well above support. So good day of outperformance for Silicon Motion Technology. And let's not forget about these dollar stores. I mean, they're just unbelievable. Dollar General. Take a look at Dollar General, up 1% today to $39.90, holding firm right at its 50-day moving average. No sellers in this stock. Several other stocks in the group. Dollar Tree, DLTR on the NASDAQ. That stock is also having a good day today, up about 0.5% to $82.54. Could see a nice breakout for Dollar Tree recently. Didn't make a whole lot of headway. Now it's pulling back a little bit, still holding above its 50-day moving average, still showing price strength in this market. That is worth paying attention to. And then finally, the other stock in the group would be Family Dollar Stores, FDO, on the New York Stock Exchange. This stock underperforming a little bit today, down 39 cents, at least compared to the other dollar stores out there. Family Dollar Stores down 39 cents to 57.83, but still looking not too bad. It is near its session low, but still holding support as well. Other retailers looking not too bad here. Bed Bath & Beyond, selling pressure somewhat muted in this name as well, still holding above its 50-day moving average. There is a tremendous amount of stocks out there that are holding their 50-day lines, and that's sort of like, I mean, I'm watching that, and I think it's interesting because even though the market is not looking that great here, there still are a fair number of stocks out there that are holding support. So Bed Bath & Beyond is another one. It's down 1.4% today to 61.93, still holding above its 50-day moving average. And I've mentioned this company in the past, Select Comfort. They have these sleep number beds, pillows, retail locations. You see them in a lot of malls, but really a well-run company here, and I still like the technical picture of Select Comfort as well. That's ticker SCSS on the NASDAQ. Stock is down 38 cents today, 1.9% to $20 even, but it'd be interesting if the market continues to weaken here. Does Select Comfort find support at its 50-day moving average? The 50-day line for Select Comfort is at 18.62. Stock is trading at 20, so still trading well above the 50-day line. Excellent fundamentals here. Very bullish conference call when this company recently reported earnings. So it's another name I'm watching here. But not a great day for the market today. Coming up next, the Tom O'Brien Show on TFNN. That's from 4 to 6 p.m. Eastern. Don't forget to register for my free webcast, December 14th, 6:30 p.m. Eastern. Do that right on the homepage of TFNN.com. We're going to make sense of this complicated market. Have a great afternoon, folks.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $4